Hello guys, good morning. Hope you all are doing good. So today is the 28th of April 2026 and this is Jeremiah right here, and I'm trying to do a quick recap on the trade idea which I actually shared with my community yesterday, and we all made profits on this trade. It actually hit take profit this morning during the London session. So I want to break down this trade, why I took the trade, and then let's see how it played out so we all can learn from it. So currently I'm on GBPUSD. The trade is a GBPUSD trade, and I want to do a top-down analysis before dropping and from the higher time frame to the lower time frame, so we could see how I got the trade. So this is the weekly time frame, right? And on the weekly time frame, you can see how the GBP/USD has been moving up bullish, breaking highs, and then a retracement, a low, lower low, and then a high that closed massively down here, right? And then it later pulled back up to react on this other block over here. So let me plot that out. It reacted on this other block right here. This is the weekly time frame. So it reacted on this other block on the weekly time frame other block, right? And there is also a fair value gap in between. So this zone is really a strong zone where you want to see price action reacting on it. So this happened last week, and I'll scale now down to the smaller time frame for us to see. Now we have a narrative or a directional bias. So since we are expecting this market to react on this key level, like this fair value gap here, we want to see how the market will react here before we make our decisions. Currently now we assume we do not have a bias here, so I'm doing this analysis how I felt yesterday and how I was actually feeling, how what I was thinking when I was doing the analysis. So when the market got here, I I quickly dropped down to the daily time frame, right? So we have a weekly time frame over here, and then I dropped down to the daily time frame. So on the daily time frame, we could see the market is actually reacting on an order block. Here you had a break of structure here, and this is an order block level where a potential zone where we expect the market to react on is also aligning with that same weekly order block. So these are our key levels, and this is structural liquidity or inducement where you expect the market to get to. So the market got there last week. It tapped the rejection. We could see massive rejections on that level, and then it started dropping. So yesterday, last week Friday, what I did was on this daily time frame, I plotted the high, the Friday high, and I was waiting to see how the market was going to close on this level. So Monday came in, and you all know with this three candle confirmation, I believe is, let me just explain, this is a CRT structural formation where we expect the market to take out the either the high or the low, and then it will drop on the third candle, right? Given that the second candle closes inside the range, right? I don't know if this is understood. You have a three candle structures like this. Let me zoom closer. You have a three candle structure like this. The first one accumulates and forms the range. The second one manipulates inside the range and closes inside, and then we are trading this third candle, which is the distribution candle, right? So after getting this, I plotted my high and the low. This is the candle that formed on Friday. So on Monday yesterday, during the London session, the market manipulated, and then during the New York session, I got my entry. So I haven't seen this. I have my narrative now. I know, okay, since due to this rejection around this level, I'm expecting what this market to drop to the downside, and I've already captured my CRT range. So my next draw on liquidity is this low right here. But since um I don't trade, I don't risk, I don't really do hold trade for too long because I'm a day trader. I don't hold swing trades. I Now on a normal day, I would have loved to be holding this trade until it hits here, but I collected my profit on the 50% level. So we have our 50%, which is our first take profit, and then the last take profit is the range low, right? So this is the daily analysis. Now if I scale down to the 4 hours, you are going to see clearly how I actually got this setup, right? So on the daily time frame, you have the range high here on the daily CRT, which is this is the 1 a.m. CRT candle that also um this market also closed inside the 5 a.m. closed inside, right? So I want to trade the New York session, so I'll only trade the New York session at the 9 a.m. candle, right? So this candle now gave me told me the right entry, like the right confirmation, because you can see how it closed inside with an inverted hammer candle, indicating that what sellers have pushed price down from the bearish order block we saw on the higher time frame, and now it's respecting and it wants to drop down. So when I saw this, I quickly know, this market is actually going to sell, and this is actually our push outside of on the higher time frame. This is our push out, and this is our key level. So I want to see a structure or a candlestick structure giving me entry confirmations on the 15-minute time frame or the 1 hour time frame. So I scaled down to the 1 hour time frame. You could see how this market rejected, and it formed something like a head and shoulder pattern. So this is just an extra conference that you will see on the chart, and it will give you more confirmation for you to take your trades, right? So I when I moved to the 15 minutes time frame, that was where I actually got my precise entry on this trade. So on the 15-minute time frame, this is the break of structure here, this is the model one here, and then the market came back and tapped on it. This is also a fair value gap here, which the market came back, reacted to on the smaller time frame. So when I saw this reaction, I said, that means this zone is actually going to hold. So I actually got my entry from the OTE, optimum trade entry. So I waited for it to displace below the daily range, right? So when it displays below the daily range, then I had my entry at the OTE, or the optimum trade entry. So I had my entry there, and then I was targeting like 15 pips stop loss, and then my take profit was at the previous day low, right? Like the previous day low. So this is how the trade play out, and I got a whooping 1:3.8 hour on this trade. 1:3, right? So this is how this trade played out, and you can see how I break down the trade from the higher time frame down to the lower time frame. I think I shared the setup in my Telegram channel, so you can see this is the trade, and that is how I got the entry, and that is how my TP was hit. So I made just $104 on this trade. It's not small, but at least is a starting point, and that is how the trade played out, and it's still dropping. So what next am I expecting? I'm expecting this market to pull back. I'm expecting this market to pull back, and then if I'll get a second re-entry, right? Because this market will definitely come to complete the CRT move. So normally I targeted the 50% of the range on the higher time frame, and since it break below the range, I'm expecting what the market to drop lower to the CRT low on the daily time frame. So firstly, I got my analysis on the daily time frame, and then refined it on the 4 hours and 1 hour, and then I got my entry on the 15-minute time frame. So my first take profit was on the 50% level. So I'm already out of this trade, and I expect the market to give me a kiss of death, right, which will retrace, collect internal range liquidity, and then drop down to take out the low at this level. So this is my expectation for GBPUSD, and in the long run, I'm expecting the market to drop more, right? Since it already reacted on this higher time frame key level, I'm expecting the market to drop more lower to this daily order block at this zone, right? So since I'm not a day trader, I'm a swing trader, I expect I take trades like this every day. So when it breaks below, it gives me more confirmation to get another entry on this trade to keep riding it down. So that's how I trade. And if you like this breakdown, don't forget to like the video, don't forget to subscribe to the channel. It's going to really motivate me to also stay consistent in making more breakdowns. And if you learn one or two things from the video, please help me to subscribe. And peace and love, right? See you on the next one. Thank you.